Will rising interest rates and inflation tank the New Zealand property market? I'm Andrew, Mortgage HQ. Today we're going to talk about what's going on in 2022 with inflation and interest rates. So interest rates seem to be going up. Inflation is definitely at certainly in the last couple of decades, a record high. So what is going to happen to the property market? Well, first of all, what we're seeing is a lot of vendors, a lot of people wanting to sell their property more than we've seen previously, because people are not able to buy investment properties and keep their current property as much as they have been in the recent past. So a lot of people, they want to upgrade, they want to downsize, they want to move, and so they need to sell their property. Now, what part does inflation have in this? Well, the nominal earnings for most people is going down, and that is especially hit hard with all of these pandemic influences. So there's less property investors able to take action. Is that going to tank the market? Well, I don't think it's going to tank the market. I think it might flatten or stall the market. There's still a lot of potential first home buyers. There's still a lot of cashed up investors that can afford to buy properties at the right price. And I feel like a lot of people, now our client base is very much property investor based. They have been waiting for opportunities to take action. They have a lot of equity, they have strong cash flows. So in the absence of the second and third home buyer property market, where people have traditionally, they own a property for a couple of years and then they look to buy a second property, that market might slow down a bit because they are small business owners. Their salaries might not be increasing as fast as the inflation. They can't keep up with the high interest rates, but there's a lot of cashed up investors that are going to keep the market prices high. And there's plenty of first home buyers around that are very happy to go into negotiation, and that the banks, because of the triple CFA changes, their appetite for lending is going up because they've been hit in the last couple of months. They haven't been able to do the lending they've wanted to do. Now we're starting to see a willingness to lend to those lower deposit lenders to make deals happen. So there should be proportionately more first home buyers coming through. There might be less of that mid-tier investor, but the market is very well supported by established property investors that have strong cash flow, they've got strong business income, they've got a lot of equity. So you're not going to see massive bargains at an average because there are plenty of buyers and there's a lot of demand, especially in the metro areas and greater Auckland areas, and that Auckland market kind of impacts the whole New Zealand market. So as long as Auckland is a highly desirable place, especially internationally, we're going to attract money from Singapore, from Australia, from immigrants that are coming in, and that's going to support the house prices where they are. There's plenty of buyers for good properties at fair prices, so we shouldn't be too concerned about property market tanking. New Zealand lending market is very safe. It's not like the Big Short movie.
So do applicants ever get rejected?
Seriously? Look, if they get rejected, I suck at my job.
Inflation, as long as it doesn't skyrocket up to 10%, as long as interest rates don't go much above where they are now, it's a pretty safe market. And just bear in mind when you're talking about, when you're listening to the economists, they are often wrong. So if somebody starts saying things like 5, 6, 7% interest rates, don't read too much into that, because scary headlines sell subscriptions. Just bear in mind that it's probably less than 50% chance that they're right, because they often can't predict what's going to happen. So if you want to own a property, now is a great time to start looking at the market. Despite the interest rates going up, you get tested on your affordability, and you just make sure that you're challenging your boss, or you're increasing your prices if you own your own business, that your nominal income keeps up with inflation. Actually take it as a chance to increase your prices or negotiate salary, so that you're getting maybe an 8 to 10% bump to more than cover the recent inflationary gap and the next one, because inflation is probably going to stick around for just a little wee while longer. So 10-year mindset, prices are going to be a lot higher in 10 years than they are today. What does inflation do? It erodes your debt. It erodes the proportionate debt. So if you buy a $1.2 million property and you use a $900K mortgage, in 10 years that property would be worth $2 million. even if you don't pay a cent off the mortgage, that's only 900k, your proportional ownership just skyrockets in that time. So understand inflation, understand the impact of interest rates, but don't get scared about taking action. Let me know any questions or comments down below.